Good afternoon, everyone, and a very big welcome to you all to another Carrick webinar today, titled quite nicely with London is back with a bang by means of property investments. My name is Jarryd Jacklin. For those of you who don't know me, I'm a private wealth manager for the Carrick Group based out of our office in Mauritius. Please do excuse my voice today, not feeling 100%, but at least I have the very famous guest speaker with me today, Radford, who some of you may know already as well. He is the managing director for the RPA Group, and he will soon share some insights and information around some incredible opportunities in the UK through property investment. For those who also are not too familiar yet with Carrick, we are an award-winning independent and holistic private wealth management company, and we assist our clients globally in all aspects of their personal financial journeys. And today, we are not only discussing property in general, but also answering the questions of why, how, and what. Why is London back with a bang? The big question that everyone is asking. How to take advantage of this by means of purchasing and mortgage options. And what does the whole process look like? What does it entail from beginning to end for you as an investor? So just some quick notes before I hand over to George. If you do have any questions during the course of the webinar, please drop them in the chat box or on the right-hand side. We'll try and pick them up as we go through the presentation, or we'll try to go through some at the end, time dependent. So that's it from me. George, you are the man of the hour, bringing this fantastic opportunity to the table for our clients with us. So thank you very much for joining us, again, taking time out of your day, and I'll hand over to you.
Brilliant. Thank you very much, Jarryd. Big welcome to everyone in Nigeria, and thank you very much, Jarryd, to yourself and the Carrick team for the invitation and for putting this together. So haven't been to Nigeria for a while with COVID, but looking to get back over there sort of late June, July. So anyone on the call who might want a one-to-one meeting, myself, Jarryd will be coming along, and then do let us know. So today I'm going to just give a bit of background on our business and just talk about our services in a bit more detail and how we add value for clients. Then we're going to have a quick look at the UK market, London, more specifically what's driving the growth now in London, because it has been quite quiet for the last sort of 4 years in the London property market from a growth perspective, that is. There have been pockets of growth, but as in the main, London has been reasonably flat. And then we're going to have a look at some London opportunity, and then I'm also going to just share some information on a Birmingham investment opportunity, which is a slightly lower price point for maybe people with a slightly lower budget. So in terms of our business, the RPA Group, just by way of background, we've got a global footprint. The key things really are the experience of the founding members, Richard Bradstock, who's based in the Middle East, Charles Ledbetter, who's based here in the UK, and myself, also based here in the UK. We've all got 20 years plus of experience of property investment, and that perfectly equips us really to source the best product and to manage clients' investment transactions in the most efficient possible way, and obviously further supported by our team. The other key point really is always being accountable to our clients. Our business strategy and philosophy is to ensure that we deliver the best product to our clients, and anything that we present has got our stamp of approval on it. It's been well researched, and we're aiming to help individual clients anywhere in the world effectively, safely and efficiently invest into direct residential property, predominantly into the United Kingdom, with a strategy that is designed to optimize your return on investment. And then we provide a full end-to-end solution, so we have a full suite of services, and we'll look in those in a bit more detail on this slide here. So as I mentioned, you know, the key to any investment really is the research and the due diligence and the investment case that underpins that. So right at the front end, you know, looking at developers' track record, looking at their balance sheet, how well capitalized are are they? What sort of product do they deliver? Is the development in the right location? Does it have planning permission? All of the key stuff that we need to make sure is in place before we launch a project. So once we've done that and we've secured the best opportunity and we've taken it to market, obviously we need to understand our clients' investment requirements. So on the investment advice side, that would be a one-to-one consultation with the likes of Jarryd and a member of the Carrick team or myself, understanding your financial circumstances, what's your investment budget, what are your investment drivers, what's your investment horizon in terms of your time scales, and then recommending a property investment that most suitably meets your investment needs. On the conveyancing side, so once we've identified the right property for you, we've secured it by way of a reservation, then obviously we need to instruct the solicitors. So we work with a panel of solicitors that we've approved, that we know provide a good service for our clients, but also protect our clients' interests. So we will appoint them on your behalf and then facilitate the conveyancing process to make sure that the legal process is completed as swiftly as possible. And for example, you exchange contracts within 4 to 6 weeks from that. On the mortgage side, we provide a mortgage service, so either directly with lenders, i.e. the banks, or with our network of mortgage brokers. We have a lettings and management business, so when your 1 or 2 bed apartment in London completes in 1 or 2 years from now, let's say, then we would undertake the handover of that property, the marketing of the unit to secure a tenant, the collection of that rent, the managing of any ongoing tenant requirements. And then, you know, as and when you require to exit the investment in 5 to 10 years time, then we're here to assist with the resale. So really a full end-to-end turnkey investment service. Right, so just in terms of where we're located, I'm in the UK, office in the Middle East, office in South Africa, office in Hong Kong, and then we're also further supported by our global partnership with One Global, who have a massive presence in Asia. So it broadens our global footprint so we can service clients all over the world, and also equally as importantly, it strengthens our product offering by the joint venture. So meaning we can get clients access to a wider range of great product. So let's have a look at property as an asset class and why it makes sense for our clients around the world, especially in the Africa region, more specifically in Nigeria, to be looking at international property investment as an asset class. So long-term wealth generation, we know if you buy property, you buy well, and you hold 5-10 years, you will invariably make money. London typically every 10 years doubles in value. So, you know, it doesn't take a rocket scientist to work out if you buy one in London, you hold for the medium to long term, you will make money. Hard currency rental income, obviously the Naira is very challenged and has been for the last couple of years. Lots of our clients, of which there are many in Nigeria, they're very much looking for diversification away from the Naira, get some solid GBP currency exposure and just de-risk their portfolio really and get some stability in there. Leverage and low cost of finance, so we can help clients based in Nigeria get mortgages, you know, let's say 60-65% mortgage loan to value, and then the interest rate would be sort of 4%, 4.5% maybe at the higher end, depending on the client profile. We know property is tangible. Again, lots of my clients based in Africa, they really like that. The tangibility also results in less volatility like in the equity market, because it's a fixed asset and it takes a while to transact on it. Diversification we've spoken about, currency exposure we've spoken about, succession and retirement planning, obviously massive for our Nigerian based clients, looking at succession planning for their children, and also incorporating a property investment into part of a child's education planning. Not necessarily just buying for the child's use in the future, be quite nice. Parents bought you a good flat in London to stay in when you went to university. But I would say more so, most of our clients look at property as a way of generating wealth by investing wisely with their money to then use those funds, the profit from the investment, to fund for their child's education down the line. That's a really big driver for a lot of our clients. Okay, so we've looked at property as an asset class. Now let's look at the UK, then we'll look at London, and then we'll look at a couple of opportunities. So why do we like the UK? I mean, the UK is still the #1 investment market in the world globally, along with the United States when it comes to property investment. Why? It's a robust, strong, stable economy. Interest rates, albeit they're creeping up a little bit, they are still, you know, by and large historically low rates, and the cost of financing is very compelling. The pound is still pretty weak, especially if you're holding USD, and we see good value in sterling. The strength of the legal system is always a big driver. Getting a really safe, secure legal environment when you're purchasing these properties just gives a lot of comfort to our clients. The market from a property perspective is massively undersupplied. There's a massive shortfall of new build properties, which we'll look at more specifically on the next few slides, how those numbers sort of translate. But it's really about 250,000 units on a bad year that we're short of to meet domestic consumption demands. World-class education system, we'll check that a bit more later. Favourable time zone, obviously for business, the United Kingdom being between East and West. The transport infrastructure, so 4 airports. Let's look at London. 4 airports within 1 hour of London. Crossrail, the new train line, which we'll touch upon. HS2, the new train line from London to Birmingham. The massive population growth that we're experiencing here in the UK, especially in England. The strong rental demand and the strong rental market. The growth we're experiencing in the rental market makes it very, very compelling. Safe haven status, we know it is a safe haven market, if anywhere is safe at this moment, given the chaos that surrounds us. And then a lot of people don't really recognize the UK as one of the leading sort of technology hubs around the world and startup hubs, but massively so it is, especially London. It's one of the key sort of startup hubs in the world and a massive technology hub. So that's the UK. Let's now have a closer look at mortgages, and then we'll have a look at London, and then we'll look at the product. So who can we help on the mortgage side? So we can help local Nigerians or local Africans and expats. So you don't need to be a British expat to qualify for a UK mortgage. We can help employed, so permanently employed working for a company, and self-employed investors. Employed is a bit easier, but we can help self-employed provided they've got company accounts and so on and so forth. We predominantly focus on investment mortgages, buy-to-let mortgages, but we also assist clients with primary residence mortgages, so primary residential mortgages. In terms of the products, repayment and interest only, 2 different products in the UK. One you pay off over the lifetime of the loan, the other you just pay off the interest on a month-to-month basis. We can fix the interest rate, which is advisable at the moment, 2-year, 5-year fixed rates, or it can be variable, so it can track the Bank of England base rate or LIBOR. Rates I mentioned earlier from around 4%. If you've got existing UK property, a UK footprint, worked in the UK before, have a UK bank account, it strengthens your hand in terms of the product you can get from the lenders, and you'd be closer to sort of 4%, maybe a bit less. No UK exposure, you're probably looking at 4% plus. And as I mentioned earlier, loan to value is around 65%. Income requirements, £50,000 per annum gross annual income. And as I mentioned right at the outset, we provide mortgage services with our network of brokers directly with lenders, and we would pre-qualify any investor before they undertake the commitment of the purchase. Because ultimately that will dictate the investment strategy, because then we have a better idea of affordability and what the client's budget will be. So the mortgage area is complex, and it's probably enough for today on that. And of course, we can pick it up in more detail on a one-to-one basis. So London back in the limelight. London's back with a bang. as the title of this webinar is. So London has been relatively quiet the last few years. There have been some pockets of growth, but especially prime central London has been very flat. So it's very much bang. The UK economy is absolutely booming, or the UK property market in particular is booming. The UK economy is still catching up, I would say, post-COVID. But, you know, we've seen some of the highest levels of growth on record over the last 12, 24 months. So, you know, 11, 12% growth across the whole of the UK over the last 12 months, which is staggering, and significantly more in certain locations. So what we're looking at for London now is over the next 5 years, we're looking at, 23.5% growth. So let's say 24% growth for London, which is very strong. The 5-year rental growth, 19%. We're looking at the gross value add to the London economy for this year of 6.9%, which is very strong compared to many other cities around the world. There's a housing shortfall of 57,000 units across the capital, which is massive. The population of London now staggering 9.5 million, but it's looking to increase by 2.4 million over the next 15 years. So those people are going to need somewhere to live. We can't build enough houses at the moment. So all very compelling from an investment perspective. London also, some may not be aware, but it's one of 2 alpha cities in the world. The other one, of course, being New York. And, you know, it is arguably one of the most important, if not the most important financial centre in the world, not necessarily the biggest. New York takes that title. It's a massive insurance hub. It's a massive medical hub. It's a huge education hub. And that is, you know, notwithstanding other drivers, that is some of the primary reasons why big multinationals, global businesses pick London for their global headquarters. Amazon, Apple, Starbucks, Google, Facebook, AstraZeneca, just to name a few sort of global giants. Okay, I mentioned earlier London is an incredible education hub. So it is home to the highest concentration of leading universities in the world. And there's almost 500,000 students in London. So it's quite a staggering fact, isn't it? I've put up here the top 10 unis. I mean, all of these are very well renowned: Imperial, UCL, King's College, LSE, City of London, Brunel, Holloway, and a few others. So this is massive, really. It's a massive driver, global sort of centre for education. And of course, with such skilled students, postgraduates, a lot of them remaining in the UK and working here, it really helps to fuel a very highly skilled workforce for the economy, which is obviously going to be positive. So let's have a look at the sort of specific parts of London that are going to grow. I mentioned earlier that prime, I'll start down the bottom, has been sort of quite challenged over the last few years. We're now seeing the forecast for this year, 7.5% growth, which is obviously very strong. The southeast as a whole, the southeast of England, is 5%, and Greater London, so you know, more suburbs, the M25 Greater London area, we're looking at growth of 6%. Over the 5-year period, Greater London actually still outperforms, so 4.7% is the average annual growth. Then it was the southeast of England at 4.4% per annum, and then prime central London is around 4%. So, you know, 20, 22, 24% growth over the next 5 years is definitely very compelling. So often talked about, finally coming to life this year, the Crossrail. So it's well overdue, well over budget, but it's going to revolutionise the transport system in London. 100 kilometres of railway from east to west, you know, and there's a train every 2 minutes, every 5 minutes, sorry, carrying 2,000 people per train, and you know, it's just going to significantly increase the capacity of the much strained, I suppose, London Underground system. So this is massive, and we've really focused on this over the years as a a driver for where we're investing clients' money into residential property, because obviously if you're quite close to a crossrail station, then you are going to attract tenants because you can easily access the airport, Heathrow Airport, and central London, the city, and so on and so forth. So let's have a look at one of our opportunities. Acton has performed very well over the last few years, actually. It's been one of the shining lights of the London property market. This is a new development that we've just launched, Bookbinder Point Vision, and the prices here, you can see London is more expensive than other markets. One bed starting around the sort of 460 mark. It's a 999-year leasehold, so it's a virtual freehold. The rental yields are pretty strong here, around 5%. The completion date is Q1 2024, so a couple of years from now. And the payment terms on this project are 10% deposit on exchange of contracts, and then the balance payable in 2 years from now. So you can secure a unit in here by only outlaying an initial 10% deposit. It's a really stunning development, got a communal roof terrace on the top of the property up here. All of the units have outdoor space, which is what buyers and tenants are after now, you know, with the work from home culture that has emerged sort of post-COVID. Have a look at a bit more specific information here. I've covered most of this. Total units in the building is 98. I mentioned it's Vision Develop, the developer. They're working in partnership with Hurlington Capital. The other thing I suppose really to point out is, you know, to secure a unit in here, initially it's a payment of a £2,000 reservation fee, which is deducted from your purchase price. Then it's a 10% deposit within, say, 21, 28 days on the exchange of the contracts, and then the balance is payable on completion in 2 years from now. For those of you not so familiar with Acton, West London, you can see Bookbinder Point is here, and then looking towards the West End over here, Paddington, and then central London. So Acton Town Station is a 5-6 minute walk from the development, and then, you know, you've got easy access to the London transport system. Once you're on the tube, get to Chiswick Park in 2 minutes, Paddington in 15 minutes. So it's still very well connected, but Crossrail is due to open shortly. And as I mentioned previously, that's really going to revolutionise Acton from a connectivity perspective, albeit it is already very well connected. You're also very close to the Westfield Shopping Centre in Shepherd's Bush, so a huge array of retail facilities at the Westfield Shopping Centre, shops, restaurants, and so on and so forth. And you've got the beautiful Kew Gardens on your doorstep, you know, one of the great wonders really of London, Kew Garden. So having that on your doorstep is a massive draw card, also for buyers and for tenants. So I suppose Acton, in summary, it's in West London. It's very well connected to get into central London, but you are equally as well positioned to get out of London, which is what a lot of people want, you know, the best of both worlds. Let's now have a look at Birmingham. So we've looked at London, and that was really the main focus of this presentation, but obviously London does come with a price tag. So, and mindful that, you know, not all of our clients are looking to invest. If we look at Bookbinder Point, you'd be looking at minimum investment really of around £200,000, maybe £250,000 for your sort of entry-level one-bed units. That would be based on a 60% mortgage and a 40% equity component with some cost on top. So Birmingham allows our clients to still benefit from getting access to the UK property market, but at a much lower entry point. So let's have a quick look at Birmingham. There's so much to talk about really. In summary, the second biggest city in the United Kingdom after London. It's rapidly growing. It's a huge economy. It's attracting more sort of global corporates, international companies than any other UK city outside of London. Goldman Sachs have just signed up for a new office in Birmingham. You can see this dot here, it really denotes where it is, and it's bang in the middle of England, which is really one of its main strengths from a connectivity perspective. because it's so well connected to both north and south, east and west. In terms of the property market, we're looking at sort of 24% growth over the next 5 years, 3.5% rental growth for this year alone. The population is growing steadily, 8% growth over the next 10 years. There's a bigger shortfall of properties here than London almost. So, you know, 60,000 unit shortfall over the next 15 years. And it's remarkably one of the youngest cities in Europe. So 38% of the population under the age of 25. There's an abundance of universities, 4 great universities in Birmingham, a student population of, you know, pushing on 100,000 people. It's the largest exhibition centre in the UK. The Commonwealth Games are coming to Birmingham this year. The city is, you know, massively evolving. There's more Michelin star restaurants in Birmingham than any other city outside of London. So it's got a huge amount going for it. I was there a couple of weeks ago, and every time I go back to Birmingham, it seems to have evolved further, and it really is a lovely place to go and spend time now. And I can see why a lot of young people feel that they'd rather not be in London and spending a lot of money because it is a lot more expensive. They'd rather be located in Birmingham, still undertake their job there, maybe earn a little bit less money, but the cost of living is significantly less, and I can fully understand that. The HS2 train line is massive. So this is the new train line. We spoke about Crossrail in the previous slides, which is the new train line in London. HS2 is the new train line from London to Birmingham. And this is going to halve the journey time, to give you an idea, from London to Birmingham. Currently 82 minutes, and that's reducing down to 45 minutes. So it's half the time really to get from London to Birmingham. And you can just imagine what that will do for commerce, you know, being able to have an office in London, office in Birmingham, and getting between one and the other in less than an hour. It sort of revolutionizes, you know, both cities in many regards. It's also helping to drive the expansion of Birmingham Airport massively. Obviously, the easier it is to get to an airport, the more people are going to use it. And it's looking to increase capacity by around 40% over the coming 10 to 15 years, employing around 8,000 people. And they're putting £500 million into the sort of master plan redevelopment of the airport. So all of this is just creating an even bigger animal of a city, which naturally is going to drive economic growth, it's going to drive population growth, and it's going to massively drive the property market growth and the rental growth. Failed to mention that HS2 is also being headquartered in Birmingham, so creating 36,000 new jobs, 4,000 new homes, huge regeneration that goes with it. So it is, it really is significant, and that's why I've probably harped on about it long enough. So let's have a quick look at opportunity, and then I'll take a few questions. I see there's dozens that have come in, and then we will conclude the presentation. Excuse me. So Birmingham city centre is located here. Our development site is located here in the Jewellery Quarter. Still accounts for 40% of the UK's jewellery production. The Jewellery Quarter essentially runs across here, to give you an idea, and it's the heritage area within Birmingham city centre, or the fringes of Birmingham city centre. Beautiful listed buildings, a lot of being converted to residential. We did a project here previously, the Copper Works, it's just completing, and this is essentially phase 2 of the Copper Works, and it's called Scholars Quarter. You can walk from here to the city centre in about 7-8 minutes. Also, this area here is all under regeneration. It's called Paradise Circus. It's about a £600 million regeneration, commercial, leisure, retail, residential, and so on and so forth. So we are really in the best location you could possibly be in Birmingham city centre. Beautiful development with King's Crescent Homes. We've worked with them on many projects prior to this. 100 units in total, spread over around 4 floors. Entry-level prices, just under 200,000 to give you an idea. Strong rental yields. The completion is the end of next year. So about a year and a half, a year and a year and 9 months from completion. And the payment terms on this are 20% deposit, and then the balance on completion in, let's say 21 months from now. So to give you an idea, let's just look at that compared to Bookbinder Point, the London opportunity. The London opportunity required a minimum equity of £200,000. This opportunity here, the purchase price is £200,000. And if you're putting in 40% equity with your cost, you're only going to require a total equity requirement of around £100,000. So you can access this project for 50% of the budget that you would need to allocate to the London opportunity. So whilst benefiting from equally, if not stronger, growth over the next 4 to 5 years. So hopefully that adds a bit of colour to the UK market, what's happening here. It ceases to amaze me at the moment, sort of how it continues to grow. The cost of materials is astronomically higher than it was. Developers are not building so much. Land is more expensive. Supply chains are massively constrained. Demand is significantly higher than it was. There's a huge amount of money there chasing returns. People are looking for stability. And one of the main things they want to buy is UK property. So from my side, the market's been great the last couple of years. And I certainly expect it to continue to be great for the coming few years. And therefore, I really do feel this is an opportune time to be looking at investing into the UK property market. These are just 2 of the opportunities that we have available. We have a whole host of other opportunities, and we can cater for clients with all different budgets and all different requirements. So the next stage hereafter would be obviously to get in contact with Jarryd or a member of his team, arrange a one-to-one consultation, and then we would be able to take things forward from there once we have a better understanding of your personal circumstances. Jarryd, I will hand back to you. I think there are a few questions. I don't know if you want to fire 1 or 2 away. Yeah, thank you very much, everyone, for your time and for joining today.
Excellent, George. Thank you very much for that. Yes, there have been some questions that have come through, quite a few actually. So I think the best bet is let's go through a few of the questions now. What we will do individually, or personally, should I say, after the webinar is reach out to everyone individually, and to answer all of the questions that have come through, of course. While we are going through a couple now, I'm just conscious of time as well. If you would like a bit more information, if you would like one-to-one time with either myself or your Carrick representative and or George, please feel free to type yes in the chat box on the right-hand side. There's a very large number of people that have joined the webinar today, and thank you very much for that. But we would like to prioritize as much as we can, for everyone that is interested in this option or these options right now. George, the first question that I see that's come through is, you did mention just a few minutes ago that these are 2 of the options that are available in the UK, and you gave a very nice brief on the UK market in general. One of the questions, do you have any options in or around Manchester, or what are your thoughts around Manchester as an investment option, even if it's compared to these 2?
Yeah, good question. Yeah, we do have options in Manchester. I like Manchester. It's a great city. We have seen significant growth in Manchester over the last 5 to 10 years. I think the big challenge with Manchester, sort of just being open and honest, is the value has diminished somewhat, and there is definitely a lot of supply in Manchester. I mean, everywhere you look, there's cranes, and so I think Manchester still makes sense if you can get value. But if you're looking at central Manchester, I mean, £600 a square foot in some instances and higher, and those are almost sort of Greater London prices, to give you an idea. So I think if you buy well and you get good value, it still makes sense. It's just how easy is it to do that is another question. But it's a great city. I love Manchester. I would sort of say that Birmingham is about 5 years behind from a growth perspective, and there's still a huge amount of redevelopment and regeneration taking place within the city of Birmingham. So from a pure value perspective, from a growth perspective, and also, as I mentioned earlier, I mean, it's actually a more significant city than Manchester from a size and what's going on there perspective. So yeah, if it were me and I was looking at that sort of price point, you can still get access to something like the Jewellery Quarter, to give you an example, around £200,000. You're not going to get anything in central Manchester for that price. You're going to be looking at Salford, you know, and moving even further out. So yeah, if it were me, I'd focus on Birmingham, and that's why, you know, we've been so busy there recently, because we see that as, you know, a stronger growth market, I suppose, over the next sort of 5+ years.
Now that makes perfect sense, and there was actually a follow-up question on that one as well, but it ties in very nicely to your answer. There is, you know, people believe that price houses have skyrocketed, perhaps in some regions, and I think when you do that comparison with Birmingham and Manchester, saying Birmingham, you know, from a investment point of view, the means of value is maybe even 5 years behind on that side as well. You're really looking for that growth and that value option. So I think that ties in extremely well. By means of further questions, we have covered quite a bit of that information. There's quite a few questions around mortgages, loan to value, rates, interest rates, and so on. Quite a few people have asked that, but you did go into a little bit of detail there, or quite a bit of detail, should I say. Is there anything in particular you'd like to touch on the mortgage side, or I know that we have covered it quite extensively. Should we cover that individually with anyone on the call today?
Yeah, I think probably best done individually, just in the interest of time. What I would say is, a question I get asked all the time at the moment is, outside of how is the tragic scenario in Ukraine going to impact, you know, the global economy and the UK property market more specifically. I mean, we're seeing everywhere the cost of everything is going up, you know, and inflation is the big challenge for the global economy now, and it's no small challenge for the UK economy. So I will link this back to mortgages, because obviously, how do you control inflation? You increase interest rates. The problem that central governments have at the moment is we're still not out of COVID. So we are still at lower growth levels than pre-COVID. And the only way we're going to get to where we need to get is by people spending and driving the economy, and people are going to spend less, the higher interest rates go up. So they will go up, but it's a very sort of delicate balancing act that global central governments have, central banks have. So I think you will see a slight increase in interest rates, but not significant. And I think when you sort of look at it in terms of where they are and where they might go in the next year, 2 years, it certainly does not impact the compellingness or the viability of UK property investment. The demand is still so strong, and the growth levels that we're experiencing are still so strong that it by far outweighs any slight increase in the cost of financing. And these are still, you know, remarkably low cost of financing when we compare it to what we can achieve in the likes of Nigeria, or if you can get financing, or South Africa, Jarryd, as an example. Yeah. So that's hopefully that sort of does in a roundabout way sort of hone in on some of those questions and some of the points that maybe are on people's minds, because that's often what I get asked. But ultimately, from a mortgage perspective for you individually as an investor, it's quite a scientific area, and we would have to undertake a one-to-one consultation to be able to give more specific guidance on that.
Perfect, George. Thank you very much. There's some very relevant points, and you know, the Ukraine and Russia scenario is at the forefront of everyone's minds, not only in property and mortgages, but it's affecting, you know, a lot of people's lives worldwide. So I'm sure that's put everyone's mind at ease. But if not, okay, let's have a chat. Let's have a one-to-one chat. As I said, everyone on the call today, thank you very much for joining and taking time out of your days. happy to arrange one-to-ones. Please reach out to myself or to George or to your Carrick representative, and we'll set up calls one-to-one, and we'll have George on the calls as well, the man of the hour, as I always say when it comes to property. And George, thank you to you again. Always a pleasure and very insightful. So thanks very much.
Pleasure. Thank you very much, and take care, everyone. And thank you very much for joining today's presentation. I hope you enjoyed it, and we'll be in touch.
Excellent. Take care. Bye-bye.
Bye.